Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that there is a market that clearly has previous monthly support here from which all this move to the upside was created, which is now turned resistance at this level. So what we could expect here is a potential retest of this previous monthly support and resistance, and then to see a rejection to the downside away from this level. So from a monthly standpoint, everything seems quite bearish. So we could expect short-term bullish price action and then longer-term bearish continuation. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see a similar scenario. We have a clear impulse to the downside, and now the market has started a correction after this impulse. Now, what we know is that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have a 0.3 to 50% and 0.618 Fibonacci retracements, all lining up exactly inside of this area. So what we could expect here is a potential correction inside of this resistance zone, and then to see a rejection to the downside away from this resistance level. We can also notice that actually this is not only a Fibonacci resistance level, but is actually a confluence of resistance zone, because if we extend it to the left, we can easily notice how this is also previous weekly support from which all this previous move to the upside was created, which is now turned resistance here. So actually we have confluence of resistance inside of this area that we could in fact expect this market first to test and then to reject to the downside. Now, if we go down on the daily time frame, what do we see? Well, from a daily perspective, we can see that the pattern that the market is creating here on the daily time frame is aligning perfectly with the view that we have already identified from a monthly and weekly perspective. In fact, the market here on the daily is starting to create this W formation. And after the creation of a W formation, we would expect a potential move lower for the completion of the W formation at the neckline, so the previous resistance turned support from a daily standpoint. Now, this would mean that we would need the market to do exactly what we wanted to see from a monthly and weekly perspective. So to see a bit more of short-term bullish price action for the market to actually create this W formation, and then to see a move lower for the completion of the W formation at the neckline. So we could expect short-term bullish price action and then a longer-term bearish continuation. Now, keep in mind that this short-term bullish price action would also be heading towards the confluence of resistance that we have previously identified on the weekly time frame, inside of which we could expect more institutional shorting, which at that point would further increase the probabilities of a potential move lower for the completion of this W formation at the neckline. So the previous resistance turned support here from a daily standpoint as a downside target. Now, if we go and see what we have when it comes to institutional shorting of USDCHF, so we check the commitment of traders, so what institutions are doing and how they're moving their orders. What we can see here, if we check the data for the CHF, is that with the last reports, net positions have been massively increased on the CHF. And keep in mind that the data that we're looking at here is CHF USD, because remember that every currency on the spot is traded against the USD. So if we're checking the data for the CHF, you're actually already checking USD CHF USD. So since we want USD-CHF, we simply have to reverse everything. So this means, simply put, that if net positions are getting increased on the CHF USD, so if institutions are longing CHF USD, they must be shorting USD-CHF, right? And that is why price action has been very bearish lately, because clearly, as we can see here, institutions have been shorting USD-CHF by longing CHF USD. Now, this means that if we will actually have here the creation of this W formation from a daily perspective, we could definitely see more institutional shorting of USD-CHF, which would at that point further increase the probabilities of a potential rejection to the downside for the completion of this W formation from a daily perspective at the neckline. So what I would expect in a situation like this. Now, first of all, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So what I would expect in a situation like this is that if the market will shift from an intraday bullish market to an intraday bearish market, I would expect the market at that point to create a potential move lower for the completion of this W formation at the neckline with good probabilities. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.